morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. The government maintains its borrowing plan for the remainder of this financial year. The centre will raise 2.68 lakh crores through rupee-denominated bonds. India's fiscal deficit widens marginally to 78.7% of the full-year target at 5.53 lakh crores in August. The level had reached 94.7% of the target in August last year. Current account deficit widens to $14.3 billion or 2.2% of GDP in the first quarter of the financial year, but it's lower than the 2.3% of GDP witnessed at the same period last year. And it's all macro data. India's core sector output contracted 0.5% in August for the first time in more than 4 years, reflecting weak demand in the economy in the months gone by. Economic Offences Wing of the Mumbai Police filed an FIR against former management of PMC Bank and promoters of HDIL based on a complaint from the RBI appointed administrator. A special investigation team will investigate the case. A clutch of macro data, and we'll talk about all of that in a bit. But first, the trade setup and the markets look okay this morning. The US markets had an iffy close, you would have to say. Not as strong as what the kind of performance that we saw the day before, but in Friday's session, but a kind of an iffy close, about 0.5% or 0.75%, but positive, and that is rubbing off on the Asian screen as well in the morning, with the Nikkei up about 0.7%, at least the last time that I saw, about 154 odd points, so good going for the Nikkei, and the SGX Nifty 2 indicating a start which is marginally in the green. The question is, will that last or no, because yesterday's fall was pretty strong from an Indian market perspective. Now, you could look at it in two ways. One, that despite the Bank Nifty correcting so much because a lot of other stocks put their hand up, the Nifty had a bout of short covering in the latter half of trade, in the last 1 hour of trade, and therefore didn't add as poorly. But the market breadth was not the most positive. The advanced decline ratio did succumb to some selling, so about close to 1:3 in favor of the declines, despite the Nifty recovering quite a bit of lost ground. Just shows that there is some bit of nervousness on the markets. And the Nifty Bank, the Nifty PSU Banking Index, the Nifty Private Bank, some of the NBFCs, weakness or correction in some of these susceptible names which happened in trade yesterday as well may trigger further weakness during the course of the day. So this is the most important barometer that you'd want to watch out for. One, of course, the Nifty Bank by itself, but two, the other financial names as well, because it is in the NBFCs and some of the other banks which are proving to be the Achilles heel right now for sentiment. Not just Axis, ICICI, IndusInd, wherein yes, there was some delivery-based selling in Axis and ICICI, but nothing too dramatic. But the kind of trading activity that happened in the rest, I mean, look at the delivery volumes there for a Yes Bank, for an Indiabulls Housing Finance. The delivery percentages weren't the best or weren't the highest. But there's some serious selling that happened both in cash and the shorting positions that got opened up in the futures market for all of these names, and this may put some pressure on the sentiment and the financial names later on in the day. Now, remember, on a day when we had volumes of 39,000 crores in the cash market, FIs came out and sold about 469 crores sold in trade yesterday as well. So much as we would want to believe that these tax cuts and the reforms are generating the interest in India, somehow the FIs are staying away. It may not be an India-specific thing. The money may be being pulled out from across the world, but there is certainly money being pulled out from India almost every single day. Amongst macro data, and I know a lot of other things are important, core sector data, for example, that came out for the month of August, also very crucial, the fiscal deficit numbers, and some of these we'll talk about as well. But the core sector data for the months gone by, showing the contraction, whether it will continue or not remains to be seen. The more important bit, I thought, from all the stuff that came out was the fact that the H2 borrowing target has been unchanged, kept unchanged. And I think, to my mind, the market may read this as a sign of an aggressive divestment push, because there is no other way that the government will be able to raise the resources in order to meet the FIS target. So if indeed the borrowing target is unchanged, the market would like to believe that the divestment push will remain aggressive, and therefore keep an eye out for all of those PSU names, BPCL, IOC, the likes, on which there could be some divestments that could happen during the course of the remainder of the year. What about the stocks to watch in the session today? Natural gas prices have been cut for the second half of FY20. The news is that the prices have been cut by 12.5% to $3.23 per metric million British thermal unit. The price for difficult fields has been cut by 9.5%. Now, the reason why this is a negative for companies like ONGC, Oil India, and even GAIL India, which imports gas and has to sell out here, is that the cut is higher than what was anticipated in a survey done. And therefore, negative for these companies, the producers and distributors, and positive for the end users, the likes of ceramic companies, fertilizer companies, city gas distributors, marginal positive. I don't think this is a big market moving thing or a big stock moving thing, but select stocks may react. So you just need to know why is it that this is happening is because of this piece of news. There's a bulk deal that happened in Tata Communication. Now, usually the name of Rakesh Junjunwala would evoke response. It's a small stake, 0.69% stake in Tata Communication. The seller is equally important. Amansa Holdings has sold about 0.65% stake. So keep that at the back of your minds. The scheme of demerger is effective today for Ultratech. For Century Textiles, Ultratech will issue 1 share of the company for every 8 Century Textile shares. So there might be some adjustments that could happen today and during the course of the days. So keep that at the back of your mind as well. And lastly, I just want to end my trade setup with what's happened in the quarter gone by since we're starting 1st October. The quarter gone by, and from a world market perspective, we've been all talking about asset classes and where to invest in, etc., etc., etc. Not surprisingly, at least for the quarter gone by, if you pull out the chart, you will see that the best performing asset class has been that white line, which is gold. So amidst all other investment classes available, and this is a global index, so it's mapping global treasuries, global stock markets, etc., indices. Gold has been the most return generating asset class in the quarter gone by. Quite simply magnificent for every Indian, because the large holdings of gold in the Indian household, so that's good news. But it's just quite amazing that amidst all this investment call and Bitcoin and everything else, it's gold which has managed to stay at the pinnacle in the quarter gone by. So interesting statistic nevertheless. Anyways, let's take a look at the First Word pieces of news. So what's lined up today on First Word. We first joined by Nikunj, who takes us through the government's borrowing calendar and how it plans to raise the 2.68 lakh crores from now until March of next year. Crude price volatility may have turned out to be good for refiners. Sumit tells us how. India's online shopping craze has made one player happy. Agam tells us which is that player, and that's Sajid Johnson to tell us why automakers have some reason to cheer in the month of September. The government plans to stick to the fiscal glide path of 3.3% for FY20 as it maintains its borrowing target for the current financial year. Nikunj Johri gets us the borrowing plan for the second half of the fiscal in this report.
India will maintain its borrowing plan for the remaining 6 months of the financial year amid concerns that the government would miss its fiscal deficit target after the surprise corporate tax reduction announced by the finance minister, which led to expectations that the government would borrow more from the market in the remaining 6 months of the current financial year. The government will borrow 2.68 lakh crore rupees through 17 weekly auctions in October to March. Out of these 17 weekly auctions, the government will borrow 16,000 crore rupees each through 15 weekly auctions and 14,000 crore rupees each through 2 weekly auctions under various maturity buckets. There's one more important update. Economic Affairs Secretary Mr. Tanu Chakravarti has said that at present the government intends only to raise money from the market through rupee-denominated bonds, signalling that the sovereign bond issuance announced in the Union Budget may not go through. Economic Affairs Secretary has said that the government is still looking at the pros and cons of such an issuance, and a sovereign bond issuance needs a lot of deliberations on the price and the current market conditions, and the government is still looking at the structure and pros and cons of such an issuance before announcing any such issuance.
Well, I still stick to what I thought that the market will read this in, and which is an aggressive divestment push from the government. Let's see if that indeed were to happen. On to other news. A spike in refining margins and fuel price hikes are expected to help oil marketers report strong numbers or strong results in the September quarter. But the gains may be partially offset by inventory losses and a slowdown in consumption. Sumit Sarkar is telling by standing by to tell us what we can expect. Sumit, we'll of course keep an keen eye when the numbers start coming in, but what should one expect?
So if you can expect a strong quarter from the state-owned oil marketing companies, that is Indian Oil Corporation, BPCL and HPCL. Now this is on the back of higher refining and marketing margins. However, some of these positives would be offset by an inventory loss and tepid growth and fuel consumption that we have been seeing. Now if you see the Brent crude, that is the Asian benchmark for oil, now though it rose the most on one day, the gains were short-lived. As you can see here, due to the Saudi Aramco attack, we had seen a 15% hike in the crude oil prices, but the gains were short-lived as they have again fallen below $60 per barrel mark. And if you see throughout the quarter, the crude prices have remained weak, and because of this, the companies are expected to report an inventory loss. Now this was because of higher oil production and a weak demand that we have been seeing globally, that crude oil prices remained weak throughout the quarter. Now if you see, generally there's a direct correlation between the crude oil prices and inventory gains or losses. Now if crude oil prices average lower compared to last quarter, the oil marketing companies tend to report an inventory loss, and vice versa. But as you can see here, when crude oil prices were around 75.89, which is marginally higher compared to last quarter, the oil marketing companies had reported an inventory gain of close to 7,100 crore rupees. While in this quarter, when crude oil prices had averaged lower at $50.8 per barrel compared to $54.6 per barrel in the previous quarter, all the three oil marketing companies had reported an inventory loss of close to 6,200 crore rupees. However, in the first quarter of financial year 2020, though crude oil prices averaged higher compared to last quarter, the inventory gain amount was limited, and that was because crude oil prices were falling throughout the quarter, and there was a sudden drop in 12 days in the first quarter of financial year 2020. But in the second quarter, that is the last quarter that ended yesterday, the crude oil prices have averaged around $62.12 compared to $68.5, and the oil marketing companies are expected to report an inventory loss in the second quarter of financial year 2020. Now if you see the Singapore gross refining margin, that is the Asian benchmark, that averaged at around $6.5 per barrel. Now this amount of $6.5 per barrel is the highest in the last 6 quarters, while the jump of 86% compared to last quarter is the most in at least the last 8 years. Now this could be on the back of refinery shutdowns and ahead of the implementations of IMO 2020. Now gross refining margins mean that the company earns higher from converting every barrel of crude into a fuel, and if the gross refining margins have averaged higher at around $6.5 per barrel, which means that the refining segment of all the three oil marketing companies are expected to do good in the second quarter of financial year 2020. Similarly, if you see on the marketing side, the gross marketing margin earned by these oil marketing companies on sale of every liter of petrol and diesel, now that also averaged higher at around 3.7 rupees per liter and 3.4 rupees per liter. Now this would result into a strong marketing performance for all the three oil marketing companies. Now what happened in the first quarter was that due to general elections that were there in this quarter, the gains were limited for the oil marketing companies, but in the second quarter, the petrol and diesel prices moved higher compared to crude oil prices, and that's the reason you can see this move coming in the gross marketing margin that they earn by sale of every liter of petrol and diesel, and that's the reason the marketing performance could be good for the oil marketing companies. Lastly, if you see on the consumption side, now that has been tepid in July and August month. That is what the data we have. We still do not have the September month data, but as you can see here, the consumption for fuel has been lower, which could offset some of the positives that the oil marketing companies will see from higher refining and marketing margins. Now the fuel consumptions have been lower because of a lower offtake coming in from petrol, diesel, pet coke and kerosene consumption. We are seeing this lower consumption in overall fuel consumption when it comes to in the month of July and August for the oil marketing companies.
Sumit, suffice to say that maybe top line could be iffy because we don't even have the September data as of now. Yeah. But the operational performance, both on the refining and the marketing side, will probably be much better than maybe the last couple of quarters.
Yes, it will be much better compared to the first quarter, where on the bottom line front we had seen on an average drop of 55%. But given the fact that refining margins and marketing margins have averaged higher in this quarter, the operational performance and the bottom line performance will be strong for all the three oil marketing.
On a YOY basis as well, the comparison shows an uptick, Sumit, on the refining and the marketing margins.
I'm not sure about the YOY basis, but on quarter basis, that is what we check for the oil marketing companies. There will definitely be an uptick compared to last quarter.
Great, Sumit. Thanks so much for putting that into perspective. So wider margins expected for the OMCs on both the business segments, and therefore watch out for that. Top line maybe iffy, but the operational performance likely to be healthy. The next piece on First Word is on the online business-to-business marketplace, IndiaMART Intermesh, which has delivered stellar returns to its investors, especially those that bought into the company in its IPO in June this year. Agam Vakil is now standing by to tell us what might be driving this rally. Agam, good morning. We've been talking about how some of these new listings have done just remarkably well. This one is no different.
This one is no different. That's exactly the point I want to make. Despite the fact that we've seen so much volatility, a lot of these new entrants will seen substantial returns, and this is after they were pegged to be very expensive IPOs. So coming down to IndiaMART's Intermesh, of course, since its debut, that is since its listing, it's gained 45%, and from its issue price, it's nearly doubled. It's gained around 81%. That said, let's talk about why this strength is coming through for IndiaMART Intermesh. Firstly, and perhaps the most important reason, is that it has 60% market share in the B2B segment, and more importantly, the use of small and medium enterprises and their use of the internet for business purposes currently stands at just 17% in terms of penetration. This, of course, means that there is much more scope for expansion of this entire industry and the business, and of course that augurs well for IndiaMART. Moving on, let's also talk about your revenues as well as your profitability. Over the last 3 years, IndiaMART's revenues have doubled from going around 250 odd crores to as much as 570 odd crores, and from an operationally loss-making unit, it has made an operational profit in the last 2 years. Similarly, reported profit also coming through in the last 1 year. And that, of course, is a big positive, which means that a lot of analysts are seeing improved prospects for IndiaMART. What is also startling is that while we have seen that gain in classifieds market share, that has been 14% CAGR, what really stands out is its moat, and this perhaps is the most important factor that the management made. IndiaMART, as compared to its second highest competitor, the difference between traffic between these two companies was 4 times in 2016, and that has gone up to as much as 16 times in 2019, and that explains that 60% market share in B2B. One may ask, won't it be easy for any of these B2C players, something like a Flipkart or for that matter Amazon, to enter the B2B segment? Well, not really, because a lot of analysts are saying that it will be very hard to enter that segment. Why? Because first of all, you need a little more sophisticated decision-making system when you run a B2B online portal, and secondly, IndiaMART deals in hard-to-find products which have very high profits but low volumes, and that, of course, is the other edge or moat that IndiaMART has as far as this aspect is concerned. Finally, coming down to valuations, and of course valuations are going to be expensive. It was an expensive IPO to start with. Edelweiss, of course, is projecting 39 times price to earnings for FY20, but its price target was 1,900 rupees per share, and just a few days ago it had moved above that mark. Of course, it's come yesterday, considering it dropped as much as 6%, 6.5% yesterday. But at 1,900 rupees per share, all the positives are priced in. So we have to wait and watch whether or not it has more legs to rally. But for now, as far as the prospects and the fundamentals are concerned, they are very much intact.
Just one follow-up though. What is it? I mean, has anybody been able to assess what is it that IndiaMART has done which is so special that the traffic has moved up from 4x to 16x from its nearest competitor in as much as 3 years?
From everyone I've spoken to and read reports, it's this unique placement in B2B, and it's something that Alibaba is still, making in a road inwards, at least in India. And IndiaMART clearly has a good start ahead. So.
Well, okay. So a good head start, and analyst community believes that it's very difficult for the others to come in and make an inroad into the space that is right now dominated by IndiaMART. 5% down yesterday, but the 1-month returns tell you a story, isn't it? Agam, thanks so much for putting that into perspective. And remember, stories around most of the things that we speak about on First Word are or would be on our website, BloombergQuint.com. Some of the stories, some of the things that we did yesterday would also be there on the website. So do log on to our website and try and read more about some of these things. Now, we've spoken about the good news. OMCs might have a good quarter. IndiaMART has been having a fabulous time. Here's something that is going to make automakers happy as well. Vehicle registrations in September actually went up. Sajid Mangat has compiled the data and joining us now for more on this. Now, Sajid, this is going to be music to the ears because when we did the dealer survey yesterday, it seemed that the September month is not going to be as good. But the registrations moving up, does that lead one to does it give us any indications?
Yesterday when we put out the survey, it indicated some bit of optimism coming in from dealers because they were trying to sell some of the products in the month of September, and they thought, and the survey just reflected that there could be a positive movement in September, which will move on to October because October is going to be a festive month because Dussehra and Diwali both come in there. But what we have seen is that towards the last 1 week of September, we've seen some activity happening in registration, registration in retail. Now this is based on the Ministry of Roads and Transport and Highways website, which monitors online registrations at RTOs on a regular basis. So what we have seen is on a month-on-month, roughly 24.2% growth we have seen month-on-month, October to September August to September, and on a year-to-year is 23% growth. Now this is the highest growth number in the year-to-date numbers, because if you look at from August to September, the jump is nearly 3 lakh units which have gone up for all kind of vehicles which are getting registered in India. If you narrow it down, we've seen double-digit growths in 20 years for two-wheelers. Now there are 3 reasons playing out for this. One is inventory destocking, which is happening because we are getting into end of December, where a lot of BS4 vehicles will be sold. So there are heavy discounts which have been put by dealers there. Companies are giving discounts so that they wanted to remove the inventory and get BS6 vehicles coming in, and the festive season which is playing a major role, because last 2 days of September were Navratri days, and that saw a lot of registrations coming in, especially people wanting to take delivery in the auspicious time of Dussehra or Navratras basically. So we've seen that happening. 3-wheelers, we've seen a good pickup happening, 40% jump on a month-on-month and YOY in registrations. Now 3-wheelers have been a bit not so great going in the last few months, but this is a class where we see a lot of small financing happening as well, 3-wheelers, because many of the 3-wheelers gets financed as well. So it's a good sign that you're seeing a 3-wheeler jumping up by 40, because it seems that some financing is now taking place for 3-wheelers, which is happening there. Passenger cars, 28% and 22% is primarily destocking, and some of them, some of the car manufacturers we spoke to last time, they were pushing some of the sales as well for the festive season. So that push is also being seen here, along with the what we have seen in 2-wheelers, because we have seen Hero and Bajaj pushing some of the sales to the dealers so that they can sell higher volumes in the festive month. But what is heartening is commercial vehicles. On a year-to-year basis, we have seen a 11% jump in commercial vehicles and 29% jump in month-on-month basis there. And tractors has continued its positive run for last 3 months. It's been doing 40% odd growth on a year-to-year basis. So it's continuing that, but on a month-on-month basis, it's up 8%. So it's still so good monsoon is reflecting in the form of higher tractor sales, which is happening, and it's compared to last year is much better than. Now these numbers are exact from the Ministry of Roads, Transport and Highways. Now it gets updated on a real-time basis, but yesterday I saw that updation was happening till 11 PM in the night, because there's so much of I think backlog which is there at the various RTOs to push sales into the festive season.
Sajid, I have one follow-up then. Could it have been possible, because the surveys would have been put out maybe on the 25th, 26th, 27th, most people for logistical reasons, that those surveys would not have picked up, or obviously cannot pick up, the uptick in registrations that would have happened in the Navratras, because Navratras started very late September, and September could actually turn out to be slightly better than what most surveys have said, because I would presume that if the registrations are happening, then the sale, at least from the wholesaler to the dealer and possibly from the dealer to the retailer, also has happened.
That's true. But look at from the companies to the dealers. There has been a muted growth of sales happening there
Because there was inventory.
Inventory. So the companies have been very cautious in pushing a lot of inventory, except for what they can push through the festive season.
Sure.
Right. Then from as far as the survey is concerned, the survey also talks about a lot of walk-ins which is happening, inquiries which is happening, higher inquiries which is there. Now those are resulting in conversions towards the end of September when the Navratras are happening. So in a typical case, if you want to buy a car today, if you go, you will get a car tomorrow itself. But many of them may have done the entire stuff and wanted to take a delivery during the Navratras, which is the last 2 days of the month. So you're seeing this huge pickup happening at that point in time. So it will, if this continues, October is going to be a very good month for the automakers. At least I don't know whether they will surpass the highest of last year or not, but we still see some of the kind of shutdowns or maintenance shutdowns happening in many of the automakers which are there. But I think it's going to be a good double-digit growth coming in October, because you have both Dussehra and Diwali coming in, and then you have the November, December, where you again see some tapering of sales happening.
Well, I must tell you, the uptick in prices warrant that there should be some uptick in the month of October on sales as well. Sajid, fantastic work. Thank you so much for putting this together. Well, as I keep on saying, our website has a lot of this stuff. Yeah, I think Yash and Yatin have put out a story which is titled that a tiny bump up might be an indicator of what could happen now. Add to that the registrations, and you probably are looking at a decent month of October. So let's wait and watch. We'll talk to our experts about all of this and more. But that's all that we have on First Word today. As I always say, lots more lined up on Indian Open. Pankaj Murarka of Renaissance Investment Managers joins in a bit later on at about 9:10 a.m. to talk about all of this. We talk about how JSPL expects to fare in the lower tax regime amidst rising trade tensions with Managing Director Mr. V.R. Sharma. And does the prompt corrective action against Lakshmi Vilas Bank put the Indiabulls housing finance deal at risk? We talked to Gagan Banga about the same. But after this break, a full tilt towards the day's trade.